The broadcast is now starting. All attendees are in listen-only mode.
Good
Hey,
morning.
good morning, Dave. How are you?
I'm doing fine, thank you.
Good. You can tell I started off this morning. I should have had more coffee. I had to kind of get my brain working in full gear here. So
Believe me, it's working.
It's working now, yeah. So I want to run through just a couple of things before we get started. One of them is our referred producer program. We send checks out quarterly to folks that have been kind enough to refer producers to us. And this is a program that we believe is not unaffected by any of the requirements of DOL. So we can continue to do this program. And it's quite simple. You refer an agent to us, that agent does business. And for as long as they're doing business with us, we pay you a small bonus on their business. So we'd love to help you with that any way that we can. If you have an agent that you think might be a good fit for us, simply call your sales director or call me, give us their name, and we'll take it from there. If they get contracted, we'll send you a little check for $50. You can go out and buy a great lunch or a kind of a mediocre dinner, or however you choose to use that. But the real money comes on a quarterly basis as we send those RPM checks out. So take advantage of referrals. We appreciate your referrals at all levels, but I know that you appreciate more when we give you a little cash bonus for them. New producer bonus as well. Again, we feel like there's no impact of the DOL on this program. So we're going to continue to offer our new production builders. So when those of you, and I'm looking at our list of attendees, we have a lot of folks that have just joined our firm here in the last 5 to 6 months, it looks like, which is great. We have some folks that have been with us for a very long time on board as well, which is great. But for those of you that have been with us for a relatively short amount of time, you probably already know this. If your sales director hadn't informed you of it, I'm going to inform you now. So when you do business anytime during the first 180 days, it counts towards your new producer builders program. You can claim the opportunities at any of those levels, and I wanted to call your level at this point to the $500,000 level, because there you'll see that we will pay for coaching for Dave, we'll pay for your first mailing, and we'll also pay for your seminar materials. So if that's something that you want to take advantage of, simply do that $500,000 of business with us. We know that you're doing that business somewhere. We want you to direct it our way, and we'll get you set up with the coach. We'll talk more about Dave's qualifications around seminars here in a moment. But we'll get you set up with the coach. We'll get you your seminar materials, and we'll pay for your first mailing, effectively getting you in the seminar business. So and that can be life-changing, really. We've seen that over and over again. For those of you that have been with us for a while, this is a little bit preaching to the choir, you know that, but as I like to say, that my competitors even would agree with me that from a service standpoint, back office support, there's just not going to be anybody that's better at it than insurance agency marketing services. We take care of your business from submission to commission. You're going to get regular updates on your business. Even if that update is we're still waiting for money from the company, we do some calls on your behalf to other companies to get 1035s done. We'll call the transferring company. We'll call the company we're transferring to, make sure that they're doing what they need to do. So we're going to take all of that off of your plate and put it onto our plate so that you can do what you do best. And if you doubt that is how beneficial that can be to your business and you haven't done business with this yet, I would encourage you to give it a try. It can really make a day-to-day difference in your business. It takes a lot of the grunt work that you really don't like to do kind of off your shoulders and puts back some time into your schedule so that you can do the things that you're best at, that's selling, and hopefully we can get you doing more marketing and the things that you need to grow that business. So let us help you on the back office side. We'll save you a lot of time and ultimately save you money and make you money. So I wanted to take just a second here. For those of you that do business with us regularly, you know about our creative team. We've got Tasia and Josh and Andrew, and they do a great job. But from your standpoint, the key is that the only marketing that they really know much about is the very marketing that you need them to know about, which is, how do I get in front of more clients? How do I develop my brand? How do I get on Facebook? How do I put a website together, inexpensively and efficiently? So they can do that, the marketing of the independent insurance, independent investment advice professional, like they're sleepwalking. And so they can do that for you. Again, we're doing it at cost or at no charge because it promotes business. And so it's the best place for you to get that kind of assistance that I know of. And if you haven't put some of that into play already in your business, if you're, if you don't have a website, you really need to have one, and we can do it for you relatively inexpensively. Not because it's going to generate your business, but it can hurt you not to have it. So often now, your clients or your clients' children are going to go out and they're going to say, okay, what's Joe's website look like before we decide to do business with him? If Joe doesn't have a website, that's going to be a big issue. And so there's a lot of things that are defensive about the marketing side of our business, but also talk to our team about what we can do that is not offensive, but offensive. So by offensive, I mean going out and doing that Facebook work, doing some emails, having newsletters that go out on a regular basis, so that you can draw kind of a fence around your clients and cordon off, so your clients feel like that you're their advisor. All that stuff makes a big ton of difference when they're deciding whether or not they want to do that business with you or the bank or some other advisor that may have gotten a piece of mail from. So certainly give our marketing team a call. They've got some great solutions. They've got some stuff that's really turnkey. They've got a bunch of things, for instance, they can make available where they just throw your logo and your contact information on it, and you can include it in things that you send to your client. Really super easy and very effective stuff. So give Tasia a call and let her spend a little time with you and tell you what they can do and how they can do it, show you some of those pieces. So our IAMS website, we've expanded it a little bit. For those of you that haven't looked at it lately, under the support section of our website, we've added the IAMS library, which has got literally thousands of pieces that you can use with your clients, everything from basic fact finders to, kind of life cycle piece of information like, hey, is your daughter getting married? Here's the things that you need to know. Or, did your mom pass away? Here's a checklist of things you need to know. There's a lot of great stuff that you can put your name on, send out to your clients for different life events. There's some sales builders out there. If you haven't looked at the IAMS website under the support, under the IAMS library, I would encourage you to do that. There's some great stuff out there besides all the stuff that you're already used to. So you get current rates out there. You've got our annuity quote engine where you can go out and do a quick quote on an annuity and find, the top 2 or 3 products in a given situation. Got the long-term or the term quote engine as well. That's got really quick, easy way. I mean, it's hard to make money selling term, but if you can do it quick and easy, by using the quote engine, that's a great way to do it. So if you just want to ask for a quote and let us do it for you, you can do that right there as well. Always, we prefer that you give us a call here at the office at 800-255-505 and let us help you. Retirement Analyzer is something we make available to our agents at no cost right now. So it's a soft piece of software we've probably had access for our agents for the last 7 or 8 years. And it really is designed to help you with your clients, give them a real global picture of where their savings are, where their retirement assets are, and how their retirement assets are likely to help them live. What their lifestyle is going to be, 10, 12, 15, 18 years from now in a very graphic and colorful and comprehensive way. We make that available to you at no cost right now. If you went out and said, hey, I want to get that software, I think the cost to you would be about $70 or $80 a month. We're making it available to our producers right now at no cost. So if you have questions on that, or if you'd like to see how it works, spend some time, give us a call here at the office and specifically ask for Marcus Soller. Marcus can certainly take some time and walk you through how that works. Wealth management, I'm going to put a quick poll up here. I want to move along as quickly as I can. So I'm just going to put up a quick poll. If you are at all considered maybe adding investment advisor rep to your business, then check that box. Let Charles and Mike and Joan walk you through what IAMS can do for you from start to finish. So if you're just thinking about it and you want to know what you need to do to test and get through that process and how we can help you with that on kind of a daily, weekly basis, give us a call. If you've just got an investment advisor rep, but maybe having trouble getting started with that because of maybe not a full understanding of all the ins and outs of what you can do there, then give Charles or Mike a call and they can certainly walk you through that as well. If you've been in the business for a little while, maybe got 6 or 7 or 8 million under management, but you want to see that business catapulted and you need some help, they would also be great people to talk to. Hit yes on that poll and let them walk you through that a little bit. I've had a couple people ask me over the last couple of months, the DOL has been delayed. What does that really mean? Is this a complete change in what's happening there? Do I still need to look at securities licensing or maybe some changes in my business? And for me to answer anything but I don't know for sure would not be an honest answer. But I can tell you that the idea that we're going to be acting or going to be held to a fiduciary standard is about 85% written in stone at this point. So how that's going to all pan out in the future, as you all may or may not know, as an IAR, you're already, by rote, you are a fiduciary, and so that's why a lot of folks have turned to that as, that's how I can best prepare for what's coming. Nobody can tell you right now exactly how to prepare, because there's a lot of things that are not yet known about the DOL ruling and whether that's going to go through as set back 2 or 3 years ago now. Whether that's going to happen that way in July of 19, I don't think that's probably going to happen, but I can't say that it's not. But I can tell you that between now and then, there's going to be plenty of debate. There'll be plenty of ideas put forward, and there will be some change in the way that we're allowed to handle funds. And I just don't think it's going to be qualified funds. What our responsibilities are going to be. I think being an investment advisor rep, being part of an RIA, will certainly prepare you very well for that. So if you haven't considered that yet, I hope you will. If you have considered but don't know what to do, give us a call. We'll give you a pretty objective look at the ins and outs of what we can do and what the industry holds for you. So I'm going to close that poll out, and thank you for voting. I know that many of you didn't vote on that, and I take from that that there's a lot of people that just don't know what to think about what's happening with the fiduciary standard. I think that is a very good reason in and of itself to maybe give one of our sales directors a call and get updated on it. I know that there's some requirements right now that many folks that work with qualified funds and strictly in the insurance side of their business with annuities are not properly doing, and that's going to get to be an issue. And so you should take a minute and think a little bit more about it. Maybe give your sales director a call and say, okay, what do I need to be doing? What am I supposed to be doing right now? And what might be my exposure, and how do I limit that exposure? Because this is your livelihood, and we don't want to put it in danger over just a little silly lack of knowledge. So let us help you if we can. Okay, Life and Annuity Academy, again, one more poll coming at you. So many of you are familiar with these. I'm just looking at our attendee group, and many of you have joined us for one of our Life and Annuity Academies. And within the industry, they've kind of, I think, drawn some recognition because they're really producer-driven. The 4 key speakers are 4 top producers that have different methods and means that they handle their business, and they do their marketing, and they meet people, and how they day to day run their business, and how they've gotten to the levels of success that they have reached. And so to have 4 different looks at that, I think is really very valuable. We mix in with that just some basic marketing stuff. We do a little bit of product stuff that's pretty general to get you up to speed on some things that you maybe need to know. We talk about what's going on in the industry so you don't get caught off guard by something that we probably should have done a better job of informing you about. So there's a lot of good information there for you. And in the end, what we know at IAMS is that being out there by yourself, a lot of times it can be like being on an island, and it's good every once in a while to get off the island, come back and get yourself refreshed and see what other people are doing, see what the industry has in store for us, get a better look at what the outlook looks like for the coming year, 2, 3, 5. It's just the right thing to do for your business. And the Academy is really proven to be a place where guys, when they look at that afterwards, they're like, that's exactly the type of information that I've been looking for. And so what I would say is that I'm looking at our list again, and I see a few of you that have been in recently. If you can on this poll, I would like you to check no. And then if you want to come back in, our next one is coming up in late March. We'll have one in the very early summer. We'll have one in late summer, and then we'll have another one in fall. So there'll be plenty of opportunities for folks to join us this year. Keep in mind that we do pay for your expenses associated with that. So we're going to pay for your travel. We're going to pay for your lodging, meals while you're there. your expenses that you're going to be out of the office for a couple of 3 days. So usually we bring folks in on a Wednesday. We have dinner that evening. We actually get started that evening, then we go all day Thursday, half a day Friday, and we'll get you back to the airport, or if you're driving, we'll get you to where you can hit the road probably about 12:30, 1 o'clock on Friday, so you can get home and finish up your week at your office. So it's a good program. The people that have been in it and been through it would probably give it higher marks than that. They would probably say it's the best program in the industry. I want you to come in if you haven't been in to see what we do and how we do it. For those of you that have, like I said, give me a call. There's no reason why we can't have you back in maybe sometime here in 2018. Would like to give the folks that have not yet been in a real chance to do that as well. So you are all much, much quicker on voting on the Academy. I appreciate that. It looks like there's probably about 10 or 12 of you, maybe a little bit more than that based on percentages that haven't been able to vote yet. If there's a reason why you can't vote, for instance, if you're just listening and not tuning in, and you would like to be sent the registration form for our Academy, simply give me a call here at the office after today's webinar, and I'll be glad to send that out to you. When you click yes on that poll, what you're doing is saying, I would like to have a closer look at the agenda, and send me a registration form. And if after I look at the agenda it looks like something I want to do, I'll complete the registration form. And what that registration form, once we have it in hand, does is basically then we just invite you in during the course of 2018 to one of the 4 events that we're going to have. And if it works into your schedule, that's great. If it doesn't, we have more in 2019. So you're not making any commitments. You're just simply asking to be considered, or asking at least to look at the agenda and then to be considered if you send a registration back. So good stuff. Hopefully you got a chance to see what some of the things are included besides the 4 top producers. We take a really in-depth look at indexed annuities. We talk about what's happening in the industry in general. So the DOL always comes up right over the last couple of years. We have 3 or 4 turnkey seminar systems that we make available. We talk a lot about business insurance concepts. We're going to go over income riders in depth. That's become more and more of an issue. We're going to talk about crediting strategies. We talk about single premium life. And then we have a couple of sales software tools that can help you grow your business as well. So a lot of information that you get over those 3 days. We'd love to have you join us. I'm going to go ahead and close that poll out. Again, for those of you that were unable to vote, what you can certainly do is give us a call here at the office at 800-255-5055. Just ask for myself or any sales director, and we'll be glad to get you the registration form out and give you a sample of the agenda as well. I'm going to skip over that slide, and we're going to move now, and we're going to talk to the coach, Dave Pimper, on 401k IRA rollovers. This is probably one of our better attended webinars on a regular basis because the qualified funds market is so huge and there's so much opportunity there. And frankly, over the last couple of years with DOL questions and how the DOL is going to affect the marketing and sales of qualified funds has been a bit of an issue that guys like to tune in for as well. There's no doubt that when you look at the coach, Dave Pimper, probably up over 500 or so client seminars. So is really experienced, probably one of the more experienced seminar people in the country. And when you couple that with his knowledge, not just about qualified funds, but about Social Security and just retirement issues in general, he's a really great resource for our folks, and not to take anything away from his staff, because I really think that his staff and what they do in terms of helping you get seminars set up, finding the right locations, making sure that everything is set up just right around your seminar is really key. But having someone like Dave that is a steady hand, an experienced hand around seminars and how they work, I think has been the key for many of our top producers to success in the seminar business. So we're really proud to have Dave with us here today. And Dave, I'm going to let you take control of the board here, okay, and maybe just spend a little time giving them a little bit more background on you and your business.
Yeah, I appreciate everybody being with us today. My name is Dave Pimper, and I'm a producer just like mostly everyone on this line is, unless you're in administration or corporate. We're out pounding for qualified prospects. Been in the business since 1981, 3 years with insurance, and then started with stock brokerage and investment brokerage in '84. I do about an 80-20 split right now. with securities versus a guarantee, which I normally use the fixed index product. That might change, though, of what's happened with the market here the last 3 or 4 days. Yeah, when the market's down at one point 1,600 points yesterday. Wow, that's something. Ending up 1,175 points down. That's interesting. Now, 1,175 down, which I was in business in 81, but in October of 87, October 19th, Black Monday, the market was down 508 points, but because of how low the market was percentage-wise, you're talking about 22% versus 4.5% yesterday. So it doesn't even rank in the top 10 biggest market percentage declines, but it was the one biggest point decline. And it's kind of shocked people. Markets don't go up forever. And what this is going to do is this is going to certainly help our guaranteed business if you're showing fixed indexed and fixed annuities. There's no doubt that when you start looking at the areas to prospect, that the 401k marketplace, which also includes the twin sister of 403b, 457 deferred comp plans with government plans, IRAs, Roth IRAs, all of that business can be transferable or transferred if the client wants to, and there's trillions and trillions and trillions of dollars there. So I put together this workshop. My two main I got others too also, but my two main workshops are 401k IRA rollover game plan, and we actually added something to it here for the time being. We've got 4 slides that are on the new Tax Cuts and Job Act with the Trump tax reform, and that's been very interesting. And I'm calling it, we're doing it the same slides as we're showing here, but we're calling it the Retirement Outlook 218. Are you prepared for the challenges ahead? And then our bullet points are about IRAs and IRA rollovers, 401ks. It's been. I just got done doing one last month at a steakhouse in Omaha, Jericho's, and we got 21 the first night. Actually, we had 28 signed up, and we had a pretty big snowfall, and we lost a few people that next day, and then we had 25 the next night. So we had 46 people. Anytime I get over 40 people between 2 nights, I'm pretty darn happy. Had 12 appointments and uncovered a ton of money. I mean, those people, they have monies in their retirement plan. Now, how much I'm going to work with, I don't know yet because I'm just going into second appointments, which is fact finding, and then closing for the third. But our business the trouble is trying to find enough qualified prospects to get belly to belly with. That's the problem. And seminars are a bit of a pay to play because you are going to pay to get the people to come in. And the most expensive part of it is 2 things. One is the mailing itself, and one is the meals. Because the meals run normally between $15 and $25. And in 401k, the subject alone, not like Social Security, you can do that without a meal, but it's tougher on this subject. So I've done a lot of those workshops. Actually, 400. Steve gave me the benefit of the doubt, but 469 as of the last workshops that I've done since the mid '80s. And if you figure that out, I do about 18 to 20 a year of public workshops, and I'm very consistent at doing them. And that I got a lot of people that I'm talking to that's in the pipeline. I just saw this morning I got 14 kind of monies available that I'm looking at from the first appointment to the third, or I close them and couldn't get the monies that I'm working on. So I've got a lot of stuff I'm working on. Most of that is generated around the seminar industry. Okay. Now, if there's any questions, type them on in, and we're going to start here. So this is our first slide. So let's go in, and that's actually the slide that comes up from the first slide. So let's talk about how much you really know about 401ks and the IRA rollover marketplace. So here we go. There's 5 questions here. It's a test. It's a quiz. So get your piece of paper and pencil out. You make your initial Roth IRA contribution for 2015 tax year on April 15th to 2016. You can do that up to when you file your taxes. How many years do you have to wait to withdraw all of your money tax-free? So where the earnings are tax-free, the growth tax-free. How long do you have to have that money? First time you've ever put into, say, a Roth IRA. Well, if you said 5 years, that's what everybody says, but you know what? actually, on this scenario, it's only 3 years, 8.5 months. You know why? Because whether you put your money in on April 15th of the last day you can put in, or you put in July 1, it all reverts back to January 1 of the year you're putting in as far as the 5 years concerned. Interesting. Huh. But you didn't know that. What type of trust do you have to establish for your IRA when your intent is to make sure your designated, your human beneficiaries within that trust are able to stretch out the tax deferral for their lifetimes? What kind of trust? It's a specific kind of trust. It's a see-through, look-through trust. It's a type of a conduit trust. It looks through that trust, finds the heartbeats of those human beneficiaries, and then you're able to inherit or stretch out and use that structure to lessen the amount of RMDs you got to take each year. Now, this is a little add-on. What type of trust do you have to establish from your non-IRA with an annuity when your intent is to make sure your designated human beneficiaries within that trust are able to stretch out the tax deferral? So how do you stretch out, or what type of trust do you need on a non-IRA? And this is a trick question. Can't be done. Normally just a 5-year, take your money out in 5 years is a rule that applies. What does the designation of per stirpes mean? Now that's pertaining to beneficiaries. There's per capita, per head, and per stirpes means per bloodline or per root or by branch. So let's say you've got, my wife's deceased, I'm single, I leave my IRA to my son and my daughter, they both have 2 kids. Let's say my son passed for some reason before I died, and I didn't change beneficiaries. All of the money would go to my daughter. None of it would go to his kids. By per stirpes means that the children, the bloodline, would receive half of that money, even if you didn't change beneficiaries. Okay? So let's kind of go here. If you have any questions, type them in, and we'll certainly go through that. So when I say 401ks, I'm also meaning the twin sister 403b and 457. But here's the things you can do. You could do nothing. You could leave it there. As long as it's $5,000 or more, they normally allow you, they won't boot you out of the 401k if you leave or get fired, quit. Roll over to a new company retirement plan if they allow it. Take a lump sum distribution. You'd think that'd be ridiculous, but get a load of this. Over 50% of the people, when they retire, take their money out of their 401k and pay taxes on it. Can you believe that? Now, maybe not the amount of money that we're working with, but a person's got 20,000, 30,000, 40, 10, 5, yeah, they take it out, pay taxes. Don't let it grow tax deferred. Amazing. But there is one specific reason why a lump sum distribution could be worthwhile. Convert to a Roth IRA, yeah, okay, or roll it over in traditional IRA, or transfer it to a traditional IRA. And this is how we get compensated normally, as people come to us and say, hey, I'm retiring and I want to see what you can do. And normally it's because of the increased options that you have, maybe from just the mutual fund family of the hypothetical Vanguard or Fidelity or Mass Mutual or T. Rowe Price or whatever it happens to be. American funds that is in that plan. Okay. Now, I go through each one of those, and I'm not going to do it today on every one, but like do nothing. So I'm going to have here, asking, will your existing 401k plan force you to take out your investments? Probably not, as long as it's 5,000 or more. If you do nothing with your investments, then you'll stay invested in your existing company plan. Now, is there a reason to leave your money with the 401k and not roll it all over? Well, a lot of people have not heard about the 55 rule for 10% penalty. So if in your company plan and you're 55 years or older and you want to take money out, you're no longer with that company, but you're 55 or older, and that was the company who you'd worked with before. As long as you're 55, you don't have to be 59 and a half. If you're 55, you could take money out of your 401k, piecemeal it out, and not pay a 10% penalty. There's penalty-free withdrawals, no 10% penalty. That's pretty cool. So I have had it before, a couple times. Say a person's got $300,000, thinking about buying a car, they need $40,000. They actually need 30, but we take 40 out because of taxes. We'll leave 50,000 in the plan. We'll take 250,000 and roll it over to whatever. Could be a fixed indexed annuity, could be a mutual fund, could be an alternative investment, stock and bonds, variable, whatever it happens to be. And then we leave the rest of it 401k, because if you take out an IRA before 59.5, yeah, there's a 10% penalty. But not if you're under those specific guidelines with the 401k, a company who you'd work with, and you're over the age of 55. Yeah, pretty cool. Other considerations, it's not a big deal in the state of Nebraska, but it might be in your state, but under ERISA law, credit protection, it's quite a bit higher. Excuse me, many times for a 401k versus an IRA. So that, if you're at risk from a lawsuit or at risk from bankruptcy, it's very, very hard almost impossible to get to 401k. And it's pretty darn hard to get to an IRA, especially like in Nebraska, but there are some states that are a little more lenient. Why would you keep it in the 401k? Maybe there's lower fees. But you know what? There could be higher fees too. So when you think about it, on a fixed index or a fixed, what is the internal fee? If you have no income rider, what is the internal fee? Zero. Has a cap. Has an interest rate cap. Has surrender charges. Could have MVA. But fees, no, they don't. So fees would be lower in this case if it went into a fixed index. But it could be higher. Just easier to stay too. Hey, I don't have to do anything. I'm not saying that's the right answer, but that's an easy answer. It's a lazy answer, but it's an easy answer. I'll just stay where I'm at because I'm familiar with that. I don't have to make a decision now. Now, I took a little longer time on that slide, but that's kind of how I'm presenting it. That's how I do it. Just because there's maybe 6 bullet points on the slide like there is here, that doesn't mean we have to talk on all of those 6 subjects. People can read. They can see it there. Sometimes if there's 6, I might just take the 2 or 3 most important or most timely. I like PowerPoints personally because it goes up, and then I know I can take that and run with that ball. I always have some leeway. All those slides have great language. I'm not patting myself on the back, but I read, and hardly anything of it was changed when we got the FINRA review on it. So if you are securities licensed, this does have a FINRA review letter with it. Okay? Roll your retirement funds to a new company retirement plan. So I specifically talk about service and guidance here. How much service and guidance do you really get with your own 401k? Unless you're paying someone over the phone who's never met you face to face, really doesn't know much about you, paying them, you don't. You do with us. How about loan provisions? No, there are no loan provisions in an IRA, but you know what? There are in a company retirement plan, so you might roll it over to a new plan. Some people just want to consolidate funds in the 401k. It keeps it easy for them. Now, I have the rest of those go on out too, but I didn't do it just to the savings of time today. This is an hour presentation. If you do it fast, you can do it in about 55 minutes. If you go slow, it might take you an hour 5, even an hour 10. I like to keep my presentations around an hour. This is a demographics on a group, has X amount of investable assets according to your, in Podunk, Fremont, Nebraska, we're going to have a lower investable net worth than we would if you probably go in with a town like Denver or Chicago or Dallas. Yeah, going to have a higher net worth there. But taking a lump sum distribution, can you do that from a 401k? Sure you can, but it's tax as ordinary income. There's no more tax deferral. The government is going to withhold 20% of the money out. So if you have $100,000 that you're taking the cash out from a 401k, government's going to give you 80. Going to take the other 20. What are they going to do with it? They're going to keep it in your name to pay taxes, federal taxes, when you file. They don't trust you. Now, you could take an indirect rollover and roll it back over in 60 days, which is just fine. But now you're 20% short. Got to come up with that $100,000 scenario. Got to come up with $20,000 out of your pocket. It's not always the easiest thing to do, is it? But there is a good reason to take a lump sum distribution. It's called net unrealized appreciation, or NUA. Now, what's NUA? What's net unrealized appreciation? So even though I got bullet points here, I normally just explain this. I said, so for example, say you've been working for IBM for 35 years. You've been buying IBM stock in your 401k with a portion of your money from the very beginning. So let's say you have $400,000 hypothetically in your 401k. $300,000 are in mutual funds. $100,000 is in IBM stock. Well, if you go back 35 years and go all the way up to today, let's say that IBM stock as a basis, you paid $25,000 and now it's worth $100,000. Okay? So there's a gain of $75,000, but it makes no difference, you would think, because it's in the 401k, it's all tax deferred. But you're wrong. What you can do, it has to all be taken out by the end of the year for your funds. But let's say you take your $300,000. I'm just making this up. Say half of it goes in mutual funds and half of it goes into a fixed indexed annuity. You take that goes into a regular retirement account. The other money, the $25,000, the IBM stock, that goes into a personal account for the owner. For Dave Pipper, my name, Dave Pipper, IRA. Now it's Dave Pipper personal ownership, a private account, individual account. What are you taxed on? Not the whole thing. You're taxed at ordinary income tax right away on the $25,000 of cost basis. So that's at the highest rate. The other $75,000 can now be taxed as a long-term capital gain when you take the money out. You're not forced to pay taxes on it now or take it out. And none of it are you forced to sell. It's just that you're taxed the first basis of it as ordinary, and the rest of it is taxed at long-term capital gain rates, 15 or 20%, depending on the total income that year. It's quite low compared to your income tax brackets. So doesn't work here if you're not in a very high tax bracket. No, that doesn't really work. Doesn't work if the stock's not pretty highly appreciated. But if those two things come about, then it could be really worthwhile to bring up to your client about net unrealized appreciation. Not many advisors know about this. I've got a real good client that's put in him and his wife $600,000-700,000 over 4 or 5 years because he was shopping it around and he'd never heard of this. Now I have some people say, "Hey, but I'm not securities licensed. Should I bring it up?" Yeah, you can't do the trade, but you can tell them about it. You're the bearer of great information, and that's what you're doing, is trying to impress those people when you're there. Okay. Now I have 4 or 5 slides like this that are kind of humorous. Experience as a good teacher, but the fees are high. I'll say, don't try to do this by yourself. You know what? Here's what happens is, let's say that you do that net unrealized appreciation. It has to all come out by the year end. Let's say that your stock came out by year end, but your mutual funds didn't come out until January of the next year. The net unrealized appreciation is going to be gone. You'll be able to roll over the money that the 300, but the 100,000 all of a sudden, now that would be 100% taxable. Yeah, you don't want to try this by yourself. You want to get someone who really understands it. And if you're coaching with me and working with me, then I do. I don't do those every day or every week or every month. I certainly have done 4 or 5 NUAs in my lifetime, and hopefully I'll do a few more. So you can certainly call me and ask specific questions on that. So I'm going to go through a little bit faster now, so we don't take too much time this morning. I do appreciate everybody on the line with us today. You know, when you're going in with seminar marketing, what you're really trying to do is you're trying to go in and educate people. You're not trying to sell people. You're not trying to product whip them over the head. No, you're educating them so they'll hopefully be impressed with what you're doing. But you know what? A Roth is just kind of the opposite of a traditional. Traditional is deductible. Roth is not deductible. A traditional, you pay, it grows tax deferred, and you pay taxes on the whole amount when it comes out. Here it grows tax free as long as you hold it for 5 years or longer. Maybe not all of the 5 years, but then the earnings is tax free. The money you put into a Roth is after tax. There's no benefit up front, but there's a big tax free benefit on the back end. Also with the Roth, there's no RMDs. for you or for the spouse. There are RMDs for the children, but of course they're tax-free. As long as you're working, you can put in over 70.5 on a Roth. You can on a traditional. There are income limits, so if you're married, I think it's about 193,000. Yeah, I mean, pretty high income limits. But if you are at that, then on joint, you won't be able to put into it. And if you ask people, where do you think brackets are going? Where do you think they'll be in 10 years? Most people think rates will go up, and they most likely will. Roth conversions have not been affected, so we can do Roth conversions. That's just taking money from a traditional IRA. Say it's $50,000, taking that $50,000 out, paying taxes on that $50,000, and rolling the entire amount over to a Roth IRA. The government allows us to do this because they get their tax money up front, right away, not at the back end. Most people don't do Roth conversions because of the cost of taxes of taking it out of the traditional IRA. In a normal, if there is such a thing as a normal, ordinary income tax bracket, and the growth of the investment, it takes 6 or 7 years probably to break even of tax-free over tax-deferred on a conversion. You don't want to take money from your account and have to pay more taxes on it. You want to take money to pay for the taxes on an outside non-IRA account to make it work. Otherwise, the timeline gets extremely long. But no RMDs. And if you're in a kind of a lower income tax bracket, you know, all of that tax-free status doesn't count as income for provisional income on Social Security. So there's some added benefits to a Roth conversion. Is there such a thing as recharacterization now? The oops rule? Oh, oops. No, it's not. That oops rule went away with the new tax reform. So there is not such a thing as recharacterization now. Now, I'm going to say something real quick about seminar marketing. Is it for everybody? Of course not. Is it for everybody? Is it for no one? Of course not. So there are some people that certainly could benefit. One of the reasons that, I mean, I'm going to tell you right now, and I'm a pretty hard worker, but I get in front of a lot of people, and I get in front of a lot of people because of my seminar marketing. And now with the market falling down some, I'm going to tell you right now, seminars are going to just go through the roof here as far as attendance. And the best time to market, actually just seminar market in general, is January, February, March, and April. May, you know, those because people are setting New Year's resolutions, they're going through tax season, they're seeing what they're paying for taxes. But now that the market has fallen about 7% in the last 3 days, and over actually almost 1,100 points yesterday. There's still some very, very good gains in the market, but I'll tell you what, I got an appointment with the fella that has invested with me, and we found an in-service non-hardship withdrawal provision that just got added to his plan. So he has $510,000. Well, he did until the last 3 days in his company plan. And I said, you know, wouldn't you really like to take a couple $100,000 of that and just kind of get it off the market? And he says, what kind of guaranteed rate can you get? And from a fixed index standpoint, if we can get a 5.25 cap, which we can, IAMS has available, you should be able to get 3.5%, 4%, you know, over a 10-year time period. He thought that was very competitive. But what do you think he's going to say now with the market going down like it is? Should have gotten out there faster. Yeah. So there's indirect rollovers and there's direct rollovers or direct transfers. Indirect rollovers are when you go and take the check in hand. And I wouldn't recommend this. It's really to people right now to go in and take that check in hand, but they still allow it, okay? And then it has to be rolled over within 60 days. Remember this, is that if you do it from a 401k, you're going to get 20% taken out. From an IRA, you do not. But also with an IRA, if you roll it over in a 60-day plan, what happens is that you can only do it per one IRA for all of your traditional IRAs over any 365-day period. So if you'd roll over 100,000, say indirectly, you get the check for it and put it on in again, and you do another one in 200 days, both of those would actually be taxable because you can't do more than one every 365 days for all of your traditional IRAs. Now, very few times do I still do indirect rollovers like that. When I started 6 years ago, I did them a lot, but not now. They're almost always custodian to custodian or trustee to trustee. Same thing, like attorney and lawyer. There's no 20% mandatory withholding. No once per 12 months rollover rule. They don't take 20. It's just much simpler. You can do it with existing IRAs. You can do it with new IRAs. But why would you do that? Why would you roll over from 401k or roll over from an IRA? Well, I think the big reason is, all of your tax deferral continues. But really, because there's different types of investment options or financial strategies that are available, where can you get a good guaranteed rate within a 401k? You can't. There just aren't very good guaranteed rates. Stable income funds paying 1.5%. You got fixed accounts paying 1 or 2%. But we are usually much more competitive on the outside. There could be fees, lower fees. There could be higher fees. There's fewer rules in an IRA than there's a 401k. A lot of people, the older they get, they'll consolidate. I got a guy 70 years old. I actually had his smallest account. He's pretty wealthy. It was with me, with 2 other brokers. He's had the other brokers longer than me, actually. He calls me up and says, Dave, he says, I don't follow my investments like I once did. Do you think it'd be worthwhile for me to bring it all together and consolidate? And I laughed and I said, well, Dave, his name was Dave. I said, Dave, you know what I would do? If it's all with me, I would be in favor of that. And I did get it all. Yeah. So sometimes people like that feeling of having it consolidated, not having to worry about where it has at different locations. Now, in this workshop, we hit on a lot of things. I'm not going to take a lot of time here, but the 7 beneficiary options, and then we talk a little bit about each one. If you leave it blank for your beneficiary, who probably decides where that goes? Well, if you don't have a will, it's intestate then. The government's going to decide. Probably will go in the right place, maybe to the wife first and the kids, but it's not guaranteed. You can name your will or your estate, but then it goes through probate. Beneficiary items, you probably don't want to go through probate. There are some things you want to go through probate. The stepped-up value of property, the stepped-up value of a single stock. But normally, a beneficiary item, that's possible. You don't want to go through probate. Your spouse, your children, your grandchildren. Charity, then it becomes tax-free, so Roth's already tax-free. You'd rather not put a Roth in, but it could go to a trust. I'm not a big believer normally of a trust as being a beneficiary because it's costly, but there's times to use a trust if there's incompetence or a disability or you want to divvy out your money a certain way. Henny Youngman, the guy that says, take my wife, please. Yeah, he says, I've got all the money I'll ever need if I die by 4 o'clock. Yeah. Then we talk about stretch IRAs or inherited IRAs, where that son or daughter inherits at a much younger age and has to take RMDs, required minimum distributions, but they're just smaller because it's off their life expectancy. How to properly title your RMD. And then we talk about, that the designated beneficiary by September the 30th of next year, you need to know who that beneficiary is. And it just talks about all the language are with those slides, and they're very, very good. Very good. Remember I talked about per capita versus per stirrupies? RMDs, yeah, 70.5. Why half? I have no idea. You got until April 1st of the next year, the first year, but after that, has to always be done at the end of the year. I talk about a QLAC, even though I'm not really a big believer of the product. It does get people's raise their eyes a little bit, talking about there is ways to defer your RMDs, not completely get rid of, but defer. Arthur Godfrey says, I'm proud to be paying taxes in the U.S. The only thing is I can be just as proud for half the money. In-service non-hardship withdrawal plans. I always talk on this so no one knows if they have it or not. The company never tells them. It's when you're able to get to your money at 59.5, you can roll a portion of it or all of it over with the advisor, us. Meaning, I got one this Friday, 200,000 off of a $500,000 plan, and trying to show them some guarantees, which they don't have really any kind of a selection right now in their current 401k. It's all American funds. Yeah, you know, they're very, very good growth, but not very, very good guarantees. We have that. That's what he's looking at. Probably wish he would have done it 3 or 4 weeks ago after the market the last couple of days, but you can take money out. They can still work there, no problem. Portion or all of it. And I almost always, if I have a good report, the person will say, could you see, if we could get to that money, could you see doing some business with me? And then we call the custodian right there, see if it's available. It's Fidelity or Vanguard or whoever it is. Social Security. If you don't know Social Security, you should. I'm telling you what, it's a vital income for the majority of people in the U.S. Even wealthier people, it's very, very important. 15% of that Social Security benefit is going to be tax-free. But talking about taking it early or taking it late, getting less or getting more, talking about spousal benefit, the divorce benefit, talking about cost of living, disability, there's just a survivor benefit. It's a very complicated, and we do coaching also on Social Security and Social Security seminars. Those two seem to work well, kind of side by side each other. But we talk here about, hey, maybe you want to take the money out of your 401k plan and defer your Social Security, because anything above full retirement age, you're guaranteed to get 8% plus cost of living. Cost of living this year on Social Security is 2%. Where can you get a guaranteed 10% income stream, guaranteed by the U.S. government from a commercial agent? You cannot. So it gets them to start thinking, maybe this Dave Pimper does know a little bit about this business. Now, as we're finishing, and I'm doing this fast again, but I like to put a lot of emotion, and I really to get the person in, you got to get them thinking. You got to get them thinking. And you really get them thinking about that procrastination is not good for them. So I talk about there's a lot to think about here, isn't there? Yep. And then I show that there's a no obligation consultation. And I'll talk about that they've got choices. And I don't have that slide here, but one of the choices is that you could procrastinate. And I'll tell them, I don't think I've ever heard of anyone ever coming to me and saying, Dave, you can't believe how much money I've made from procrastinating. And everybody laughs. I have them take out the yellow sheet. And on that yellow sheet, this one right here, they mark yes or no. But if you mark yes that you do want a consultation, give or take, it'll last right at an hour. There's no cost, no obligation. Truly leave your checkbook at home. We've got dates and times for the next 2 weeks. I want them to sign up here. And we got 12 last time. And out of 12, we'll normally lose one. One will fall out, so we'll probably have 11 actual appointments. And of those 11 appointments, you probably have 7 of those or 8 of those within the first 2 weeks, and then they kind of linger on a little bit. But I hope they go to a second fact finding if there's money found in the first one, and then it goes to the actual proposal on the third one. I used to always do 2 appointment closes, and now I do a 3 appointment closes to get a little more windshield time with my prospect. And then kind of how I finish here is a promise. I talk about leave your checkbook at home. I talk about that we're going to uncover one financial problem and hopefully give you some solutions to that, whether you come back for a second appointment, need to or not. So you might want to ask yourself, what are my best rollover options? If you don't know, you probably want to mark yes on that consultation form. Could a Roth conversion benefit me? Not many people really understand Roth. I do. The conversion aspect might be worthwhile. How do I complement Social Security with my retirement money from my retirement plans? They shouldn't be standalones. I'll say there's 5 pillars of income. There's wages, there's pensions, there's investable assets, there's RMDs if you have retirement plans, required distributions, and then there's Social Security. It's not Social Security standalone. How it communicates with those other 4 pillars of income. And then I normally say, you know what? I think Social Security income stream of when to take it, I think it's the worst water cooler talk, corporate water cooler talk there is. Hey, Bill, I took my Social Security at 62 the earliest I could. You should too. It's so individual. You need to take when the best time for yourself is. Could different investment choices benefit me? How is the guarantee in your IRA or 401k? We're very competitive in that arena. You know, how about, and again, I'm securities licensed, so I show alternatives that aren't marked to the market. Not everybody on this call will have that, but I say, hey, you know, with the market being, I would say, with the market being down over 1,000 points yesterday, you know, maybe you don't want to have all your money in the market, but you still want a little more potential on the upside than a guarantee. That alternative investment, yeah. I certainly have an expertise in that arena. Beneficiaries, don't mess them up. And then I normally tell a story here about how someone didn't change their beneficiary and the first wife got the money, so we'll make an impact there. And sometimes my wife says that the second opinion sometimes is the very best opinion. So I get through that, and then I say, you know, George Foreman. This is kind of fun how I end up here. I just say, you know, he was a great boxing champ, won several belts. But you know where Big George made the majority of his money in his lifetime? That's right, George Foreman Grill. Go look it up, Google it up. He got paid a check up front to use his name of $136 million to use his name for George to promote that, not counting any kind of override that he gets per grill. So then what I always say, I said, so unless you have your name on a grill, you probably need to mark yes and come in and talk to me. And then everybody laughs. And I'll say, hey, I appreciate your time today. I hope you learned something. I'm going to really enjoy seeing quite a few of you at the appointment here in the next couple of weeks. Fill those out. We'll pick them up within 5 minutes, and then the salads will be served. That's it. We work from a track. I've done 470 of these types of seminars, and it's a bit of a pay-for-play because there is cost to it. But I'll tell you right now is that if you're scratching to get in front of more qualified prospects, we should talk. We should talk and just see if something like this type of marketing could help you in your city. So I'm going to turn this on over to Steve, and we'll see if there's any questions, or I can help you with any more specifics on seminar marketing.
Thank you, Dave. Great presentation as always. One of the things that has come up here a couple of times has to do with we talked about the new producer bonus. So I don't need to go back to that slide. I kind of know it by heart. But at the 500,000 production level, there is the ability to get the seminar coaching with Dave. So we'll take care of the full cost of that. There's the seminar itself. Dave will make that available to you. It's $4,000 for mailing costs is included in that as well, which is a little bit more, I think, than Dave usually recommends that is spent on the mailing itself. So you could also put that towards meals if you wanted to. And then included in Dave's coaching process, Dave, there's a couple of questions about what do you include in that. Could you just run through what you and your staff handle from a seminar setup perspective and the coaching perspective on the seminar itself?
Sure. Yeah, we can be as much of your back office or as little. So you're going to get coaching from me, and coaching from me is going to go on in the 5 sessions. They're about 45 minutes each. I'm going to go through all the slides, kind of how to set the room up, what to do at the seminar, but the important thing is kind of getting what the slides, feeling comfortable with those slides. It's kind of what you say in your first 5 minutes and how you end the last 5 minutes. How you start, how you finish is extremely important. We spend quite a bit of time there. A little bit about the appointment setting. I mean, everybody knows how to sell, but I kind of tell you what I do that has been successful, and it's a track. And I tell people, don't vary from the track the first mailing. If you want to vary the second, third, fourth mailing, and so forth, that's strictly up to you. But follow the track because it does work. I mean, I've done a lot of those. I've changed some things, and I certainly have rerouted some things. You know, as times have changed. But we mail out about. I like to mail out 6,000 pieces, and 6,000 pieces. The cost to it is at 55 cents a piece. So you got $3,300 wrapped up in the mailing. So this isn't for the faint of heart that says, hey, I'd like to do this whole thing and do it for a few $100s. I mean, it just is impossible to do. And then there's the meal cost to it. of the people that are coming. But what it does is really the first piece of business that you write normally pays for the workshop, and the second, third, and up pieces of business that you write normally you're making above that. If I can bring in $250,000 or $300,000 worth of assets from a workshop like this, I'm pretty happy. And then Steve has just put up, would you like more information on the 401k IRA rollover seminar coaching? Well, mark yes or mark no. If you mark no, then we certainly won't talk. If you mark yes, then Lynn or Amy, one of my two administrators here in the office, are going to go in and help you set up a good time for us to meet for 25, 30 minutes and talk about kind of your marketing needs. One more quick thing, Steve. So Lynn was really who kind of heads up the internal for us. She will help you get the demographics. She will help you go in and get the 800 number. She will help with between us and the print house, our mailing house, for the demographics of the workshop. There's just a lot that she's a contact person that we're available here, and we kind of guide you through this. Some people, after one or two or three times, they kind of like to just do it themselves through our association with our vendors. But we can certainly help you from there on out. And we know that not everyone has a lot of administration, and this takes a little bit of time and effort. But we've done so many, hundreds and hundreds and hundreds, that we can certainly pitch in and help you free some of your time up, for the regular things that you're doing. I was going to jump that back to Steve. If he's taking a sec to get on,
Dave.
Oh, there he is. Okay.
So I had a question from Ty, and Ty's question was, so if somebody responds to the mailing and wants to set a reservation, do you guys handle those calls in your office, or how do you handle that?
We do not. That's done through an 800 service. You could take him at your office. We don't like that idea because there's so many shift workers. There's so many people that they might call at 11 o'clock at night or 10 o'clock at night, and you're not there. So you pay for 40 reservations. You pay $100 to have a professional 800 that really does this. I've used them for over 10 years. There's other ones out there, but the ones that I use, they're not perfect, but they're very good at what they do, and they take all the calls, and you get an email right away to let you know who that is.
Good. And so it really comes back a little bit to, I probably should have bumped in and said a little bit about how important that process is. We have somebody in the mix to help you with seminars. We think that here at IAMS over the last 16, 17 years, we haven't really offered any seminar opportunities that didn't include that one-on-one type coaching that Dave offers, because it really is a difference between the level, a very good level of success and maybe failure. And that's it really is important. So there's all those little things like, finding the right venue, getting the 800 number set up, getting the response line set up, getting the follow-up, how to set the appointments, how to follow up on each of the attendees. And so Dave's track is step by step by step. And at any one of those steps, you can run into a pothole that can derail your seminar, or at least make it not as efficient and not as productive as it can be. So we're really big believers here at IAMS that you need that step-by-step coaching. Now, can Dave say something, hey, this is the way I recommend you do it, and you say, well, I'm going to do it a little bit different? You can certainly do that. As Dave mentioned, to stay on the track, at least for the first couple, seems like the right thing to do, because it is proven. As I mentioned at the outset, Dave is probably right up there around 500 total seminars, and it's not just Dave, but Dave and his staff that have done that, and they know what they're doing, they know the processes, and can really help our guys through that. So I think the coaching part of this is really invaluable. It's a difference between success and failure. I hope you'll take advantage of that new producer bonus that we talked about earlier and let us pay for the whole thing for you as well. Once you get into the seminar business, if you look at IAM's top 20 producers, probably 14 of them have some involvement in seminars at some level, whether that's regular seminars, Social Security seminars, whether they're doing, client type seminars, whether they're doing lunch and learns. All of those things have some seminar to them. So if you're not doing seminars and you want to get to the 5 to 7 million and above level, it's going to be hard to do, because just the logistics of trying to get in front of that many people and make that many quality presentations can be a little daunting. And so seminars is going to be one of the more likely ways to get there. I wish I could find other ways to do it, because I know that seminars can be expensive, and I know that they can be a little bit of just a logistics issue. And so that we've done the next best thing, which is to let the coaching folks take over a lot of those logistics, so that we can at least remove that time and the potential for something to get missed or a mistake to be made to impact and maybe make a big difference in your return on a given seminar. So we're happy to do it. We pay, as Dave mentioned, for most of his coaching either way. If you decide to do that business and take advantage of the new producer bonus, that's a great way to do it, to allow IAMS to basically pay for all of it for you. And I don't know that you'll find, if there's a better person and a better team than what Dave has got to help you through the seminar process, I would be hard pressed to know who that could possibly be. To have that much experience and that much care and organization at your disposal is just priceless, really. And so if you're thinking about seminars, it's a good way to do it. If you're not, or if you've basically kind of written that off after listening to Dave today because you're intimidated by some part of it, certainly understand that. There's a good reason. There are very good reasons to chuck no on that poll. It's not for everybody, and we understand that as well. But Dave, is there anything that you want to add to that? I know some people are making some decisions right now about whether they're interested. Is there anything that you might say that could help people make a decision one way or the other as to this is the right thing to do?
Well, I would just say that if you've tried seminars before and you didn't have success, I think what happens is, especially in the old days, that you were given kind of a blueprint of what to do, but no one walked you through slide by slide and step by step and the entry, the close of what to do at the actual workshop itself. I mean, a mentor to walk you through. And I get paid from coaching. I don't get paid from an override from the system. So what happens is that I'm going to get paid $750, $150 per coaching session. IAMS, as long as you qualify and you're going to write some business, the opportunity of getting contracted through IAMS and write business through IAMS, then IAMS pays for $555 of it. It's $195. That's what's out of your pocket for coaching with me. So I can do 7 or 8 people per quarter. I'm only going to do about 30 people per year. That's it. Coaching. Because I'm in full production. I'm not a full-time coach. I'm a part-time coach in full production. So what happens is you're working with someone that's out there beating the bushes just like you are, and have since 1981. I'm 62 years old. I've done it for a long, long time. So as far as workshops like this are concerned and the one-on-one coaching, there's not many people, not many coaches that are in the field in doing this one-on-one. So, if you mark yes, that doesn't mean that you've got a coach, but you're inquiring. But if you've done some before and you haven't had success, you might want to try it again, because if you're willing to work, put some money, invest some money in your marketing, lots of times there can be some very, very good results of it.
And I can verify that. We've had some, as I mentioned, we've had some good results from our regular producers, but Dave's work with a lot of those folks and other folks throughout our production levels has been just tremendous. So recommend him highly. Certainly if you're not in the qualified funds marketplace, and this is one area where I think some folks have missed the boat over the years, there's a lot of money in the qualified funds marketplace. That's going to be the biggest single spot that you can look at, and some producers just ignore that completely, and that's definitely a mistake. And Dave's, whether you choose to do seminars or not, just having some understanding around the 401k and IRA business will be a great benefit to you. So if you don't and you want to get more, I would sign up for at least the coaching part of it. I'm sure Dave would be happy to work with you on that as well. So whatever we can do to help. There are a couple more questions, Dave, and most of them are about kind of costs and benefits of seminars, or costs and profits of seminars. If you were going to, and I know sometimes that numbers get inflated, if you can give the guys and gals here just a really realistic view of what they can expect from seminars in terms of the out-of-pocket costs and what they can expect in terms of business from seminars. Can you take just a couple minutes? I know we're a little bit over, but we've got 4 or 5 questions. I think we should try and answer those.
Yeah, and I'll do this kind of quickly. When you mail out 6,000 pieces at 55 cents, you're going to have $3,300 in the cost of the workshop itself. Okay? The seminar is proprietary. So on a proprietary seminar, what happens is that you're not paying for a third party to go on in and to supply that. So that's paid for. The meals are cost for the meals. And if they run $20 a meal and you got 40 people, that's $800. So you can look that you're going to have between $4,000 and maybe $4,500 by the time that you have $100 for the 800 number. And then pretty much everything is in that. So $4,000 to $4,500 is about going to be your average cost. Our goal is to get 40 people there, to get at least 10 appointments. If you get 10 appointments, you have 9 or 10 appointments, you know what? The chance of writing business is extremely high. The chance of writing business with 2 different individuals is very high. And we would like to get $250,000 to $300,000 under AUM by the end of that session. That just gives us more people for referrals and the ones that we can drip on, and it just a lot of good things happen when you're seeing people face to face that have money.
Good. And so that gives you all a pretty good idea of, I think, really realistic. I've heard other people talk about the money that they make when they produce seminars, and I'd like to think that everybody's going to have 10 appointments and sell all 10 of them, and they're all going to have 400,000, but that's just not realistic. And we don't want to give you a view of the seminar business that is not realistic, and so you go into it with eyes wide open. The other part of that, I think, that maybe gets left out is there's a certain momentum that comes with seminars that you just don't get any other way, where you've got people that, maybe a year from now come back and say, yeah, I was at your seminar on such and such a day, and now I went to your second seminar and we're ready to do business, or now they're retiring. So there's a certain momentum of just constantly getting in front of people that seminars brings you that I just don't know anything else that works quite as well. So if you haven't considered seminars, this is a great time to look into that. And I think now, as Dave mentioned, this time of year and with the market being a little bit bumpy, I just don't know. I think you're going to get really good attendance right now if it's something that you want to do. So give us a shout. I think we have pretty well exhausted, except for a few very specific questions, Dave, which you'll see on the report that I'll send you over. So we'll get those answered on a one-off basis. Thank you all for taking some time with us today. Been a great webinar as always, Dave. You do a great job. Appreciate it very much. Thank you all for joining us. I know there's a lot of things you can do on a Tuesday rather than sit and listen to this. So we appreciate your professionalism and the fact that you want to grow your business. And here at IAMS, that's what we want to be associated with, is people like you that are looking to do a better job for their clients and do a better job for their families in their business. So whatever we can do to help you, please don't hesitate to give us a call here at the office at 800-255-5055. We'll be glad to put you in touch with Dave if that's what you would prefer as well. Any way that we can help, we certainly look forward to it. Thank you for joining us today, and have a great finish to your sales week. Dave, is there anything you want to finish up as we close out here?
Thank you very much for thanks a lot for taking your time. Hopefully we can talk and have a good hump day tomorrow.
Thank you, Dave. Thank you all.
Thank you, everybody. Bye-bye.